Hello and welcome to InvestFlow, your channel for qualitative stock analysis on YouTube. My name is Niklas. Today we'll be looking at Sofi, one of the growth stock darlings that recently had a sharp decline in share price. We'll be looking over the fundamentals of the company, over the valuation and over the business model. So yeah, let's find out if it's a fundamentally good investment and might offer a good opportunity at current share prices. Sofi Technologies, ticker symbol Sofi, currently has a market cap of 10 billion US dollars. They currently have around 2,000 employees and were founded in 2011. They are headquartered in San Francisco and are in the sector of fintech. Their CEO since 2018 is Anthony Noto. If we're looking at the chart, we can see that SoFi, like many other growth stocks, has had a sharp decline in share price in the last weeks and months. We can also see that in January there was a big spike in share price, which came down again shortly after though. We will get into why that happened in a bit. In the ownership structure, we can see a few interesting things. Firstly, SoFi IPO'd last year via one of Jamad's SPACs, so that's why he has a 2.8% stake in the company. Then we also have Clay Wilkes with a 5.3% stake. He was the founder of Galileo, which they acquired. Then we also have a big stake from SoftBank, who are a partner of them, and have a 12% stake and are with that the largest owner of the company. Then we also have some big companies like Vanguard and T. Rowe Price holding large stakes in the company. Analysts currently are mainly positive towards the stock. 3 of them have a hold rating, while 9 of them have overweight a buy rating. The lowest share price target is $16, which still offers a 41% upside, while the highest price target with $28 offers an astounding 146% upside. Keep in mind though that some of these targets could be outdated considering the sharp decline in share price. Let's take a look at the business segments of SoFi. SoFi has 3 main segments. One of them is lending, where they offer things like student loans, personal loans and home loans. They also have a technology platform called Galileo, which they acquired, which we will get into more detail later. They also have a lot of different financial services, including investing tools, money protection tools, and credit cards. So we can see they offer a large ecosystem of services which customers can use. I find it always important to understand the mission of a company. SoFi's mission is to help their members achieve financial independence to realize their ambitions. On the right side of the screen you can see a little demo of what the app looks like. You can see that a lot of different info is collected there, like the current balance of the portfolio, credit card debt and credit card balance, things like the investing account and student loans and the credit score. So you have pretty much everything you need to know in one neat little app. SoFi thinks the fintech space is a winner-takes-all market. They think they can disrupt the space by offering everything that somebody needs, like checking their credit score, having taking a student loan or investing. They want to offer all that in one single app. They compare it to other winner-takes-it-all markets like Amazon in e-commerce, Spotify in music streaming, or Airbnb. Let's take a look at their product portfolio and how they want to achieve this ambitious goal. They started with analytics functions like SoFi Home and Money, and then continuously added new features like investing, loans like home loans, student loans, and credit cards. And then also in 2020 added rewards to the platform. So you can see that they keep progressing their product and want to offer more and more into the ecosystem. SoFi has some very ambitious growth goals. They expect their financial services to grow at a 150% CAGR from 2020 to 2025 on their path to profitability. The technology platforms are expected to grow 55% CAGR in the same time span with a 62% margin. Lending is expected to grow with a 25% CAGR at a 58% margin. If they can hit these very ambitious growth goals, they expect to grow from 600 million adjusted net revenue to almost 4 billion. That would mean 5x of revenue, more than that even. They also expect lending to become less of a dominating part of their revenue, and especially financial services, which are growing from the lowest base, to become a large part of the revenue pie. Sofi is looking to leverage their ecosystem by using the so-called financial services productivity loop strategy. They're looking to build trust and a relationship with the customer in the first product that they're using. This will drive success and cross-selling into other products they offer. For example, a customer might get drawn to the investing tool they offer and afterwards take a personal loan, then order a credit card and eventually take a student loan. These products are designed to work together, and especially because they're all in the same app. Sofi offers some insight into how their cross-selling is going. In 2019, they started with 700,000 members, and as of Q3 2021, they almost reached 3 million members. These 3 million members saved more than $100 million, paid off more than 22 billion, and raised loans exceeding 59 billion. They also mentioned that 24% of product sales come from cross-buying of existing members, significantly lower acquisition costs. One of the big reasons why fintech is beating banks is that they can acquire customers significantly cheaper. That also applies to Sofi, and we can expect this to ramp up in the future as existing members use the platform more and more. Sofi estimates the total addressable market, or TAM, at $2 trillion. With huge TAMs like this, it's always important to consider that these are highly fragmented markets, and that one single company will most likely never achieve to get the full market share. The big opportunity they see is that half of Americans have two or more banks. Some of the reasons they do this is to have flexibility, to spread out their finances, to get the lowest fees for for every different product, and in general just to use different products that different banks offer. Sofi is looking to put all of these services and best practices into one single app and make it as flexible and convenient as possible. In April 2020, Sofi did an acquisition of the technology platform Galileo for $1.2 billion. Galileo offers a lot of different services regarding payments, card issuance, and other fintech problems to leading global digital banks around the globe that trust a total combined value of over 111 billions to Galileo and their services. The platform is an established player and used by the majority of banks, including Sofi, so it makes total sense to acquire them. This also leads to the rapid growth they expect in their digital services. Let's take a look at some recent news. In the chart section, I already mentioned that the price recently surged a bit and then came down again with the whole market. That was in January 19th when Sofi announced that it will receive a banking license and will convert into a bank holding company. Sofi expects this acquisition to close in February and this subsidiary to operate as Sofi Bank. The company plans to inject around 750 million in capital and execute its plan as a nationwide digital business. Sofi also shocked the world when they announced that they will acquire the naming rights for the home of the Los Angeles Rams, the now called SoFi Stadium, for 625 million. The naming rights will go from 2020 all the way through to 2040, so will exist for 20 years. This is especially huge because the Super Bowl will take place there this year. And if you just look at the prices that advertisers pay for just a single second of ads there, it's just insane. So the publicity they get from this is truly incredible and helps them to convert more people to their platform. Before we get into the fundamentals of the company and the valuation, I would kindly ask you to thumbs up the video, leave a comment and subscribe. This is our first video, and if you liked it, please help us spread the word. So let's take a look at the last reported full year numbers. We can see that revenue increased by 37% from 2019 to 2020. Net income stayed around the same at a loss of around 224 million. EBITDA moved upwards to only a loss of 44 million. Free cash flow on the other hand though decreased to minus 500 million. Equities also increased from minus 300 million to around minus 120 million. If we look at the last earnings report, we can see that from Q3 20 to Q3 21, revenue grew around 28% from 216 to 277 million. The net loss got a little better from 42 million to 30 million. These 28% revenue growth aren't really on par with the expected revenue growth rate the company gave us though. So investors have to keep an eye out if they can keep up the expectations they set themselves. Let's take a look at valuation. Since Sofi isn't profitable yet, we can't calculate a lot of the normal metrics I would use, like the PE ratio, the PEG ratio. We can look at the price to sales ratio though, which at the peak was around 25 to 30 and came now all the way down to 10. Price to book ratio is around 2.4. In the last few years, Sofi had some great revenue growth. From 2018 to 2020, they managed to grow the revenues by almost 160%. In the same time, the net loss stayed relatively stagnant at between minus 250 and minus 224 million. Let's take a look at the debt situation for Sofi. Sofi has a net debt of around 2 billion, but they also have a negative EBITDA, so we can't really calculate how long it would take them to pay off the debt just from the EBITDA. If you're looking at the debt to equity ratio, they have liabilities of 3.5 billion on the one side and equities of 4.2 billion on the other side. This leads us to a debt to equity ratio of 83%, which is much below our guideline of 200%. Let's take a look at the guidance for Sofi. Sofi is expected to grow the top line by around 40% each year until 2023. This would lead them to a revenue of over 2 billion by 23. EBITDA is expected to skyrocket from 30 to 370 million. Meanwhile, operating profit and net income are expected to narrow to around the break-even. So let's summarize Sofi. Sofi is a broadly diversified company with a lot of different revenue streams and opportunities. They have a big ecosystem which they can leverage by cross-selling customers. The news flow recently has also been good, with the bank license they're acquiring and the Sofi Stadium. They are also in a great future trend with fintech and especially being a big platform for all fintech solutions. On the other side, they aren't profitable yet, so investors have to take a look at the cash burn and see if they can go towards a break even and eventually become profitable. They also have a lot of great competitors in the space. Just think about companies like PayPal, Square and the like. Let's take a look at the mode of the company. We think the technology is pretty good. They have the Galileo platform, which already was a market leader before they acquired them. But then again, they also have a lot of competition and similar products in a lot of their segments, like the lending and stuff like that. On the brand, we think they aren't there yet. They are making great steps with the acquisition of the naming rights for the SoFi Stadium. And it's a key step in their success if they can establish a strong brand that people can identify with. On the experience side, we don't think they have a lot of experience yet, considering they're such a young company and they have a lot to learn. But it also means they have a lot of opportunity left. So let's take a look at my expectations. Sofi has a broad ecosystem, which will ensure that they will have increasing revenues from different revenue streams and a lot of cross-selling. They also have the Super Bowl coming up, which will make the company extremely well known to a lot of new people at the stroke for a low price. The banking license opens up a lot of new possibilities for future and profitable business ventures. Their service portfolio continues to expand. But on the other side, we also have to take into account that the current market environment is not very good towards high growth companies. The trajectory of their yield curve really doesn't favor them right now, especially if they have debt like Sofi. There's a lot of competition in the space too, especially for specialized products. If Sofi really wants to have the best product for all the solutions to be the single platform people use, they will need to keep expanding the services and keep the quality high. To summarize, we think there is a good, substantial, sustainable upside potential for the company if they can execute like they guide. I would also like to know your opinion. Do you like Sofi as a company? Do you maybe already own shares? Let me know in the comments, and thanks for watching.